That might have fixed the issue. I think we're back. Again, my apologies. So we did get rejection off of that fair value gap. It was a deep, deep cut in though. So it depends on where this candle closes. This is comparable to going down to the beach and seeing red flags. You're not supposed to get into the water. Too strong of a undertow or a current. So it prevent drowning. You want to stay out of the water. That's what this is. You got to be able to recognize this kind of a setup immediately. I think too many people stick around and try to fish and or try to swim in opportunities like this. This is not a favorable setup. I'll go over it one more time. All the bias here is telling us that this market wants to push down on NAS. All of our confluence here is telling us that US 500 wants to push up. The only way US 500 could push up is if we get what's called a 10 o'clock reversal on NAS. And we do not trade 10 o'clock reversals. We want the 10 o'clock candle to be a continuation candle. So when you have this, the only place you can even aim for is the midpoint, the 50%, the happy medium, which happens to be the New York opening gap for US 500. So it could go right into here, wick off of the DSD high, and then drop from there. But could it go past that and go higher? It could, but we can't aim for that. We do have a blue zone, a dark blue zone right there. So US 500 could push up into here, just wick it off of this. But when you have this much divergence and two different stories being told, you're better off just staying out. About 13 minutes away from 11. This is the highest that I can predict US 500 will go and possibly wick up into here, but that's as high as my prediction goes on a day like this. This is not a day I would trade. But we'll stay with it just to see what it does. Still just gesticulating in this area. We do have a 5M bearish fair value gap that's been created right in there. So we're getting some movement here from NAS, but I'm not sure if I see NAS getting past the new week opening gap. Could maybe make its way up here, but we do have a big range. We still have no confirmation. Could be like yesterday where we just gesticulate back and forth and not really go anywhere. So far right now, US 500 is the only one telling the most consistent story. Everything is to the upside. We have not hit a higher time frame PD array. So this thing could still, again, punch past here, maybe all the way up into the blue zone, but I think it's going to be slow. It's going to be hard fought. Let's see. Just got to be patient. Still, again, not a condition that I would trade. We can maybe try and take a look at US oil in a minute. US 500 coming back into the New York opening gap, the midpoint. That was pretty much where we predicted that it would at least wick off of. I'd like to see it wick higher, maybe even to the DSD high, but the body close here, that's as high and far as we can predict it, but or as far as our strategy can predict it. Anything beyond that, we don't know. So we just got to wait and see. Still just gesticulating right here. Wants to take out these highs and hit that midpoint. Let's see how much higher it'll go. Definitely want to see hit the midpoint of this. And this is a perfect example of, again, we know where it's going, but there was nothing here for me to, there's no 1 to 3 here. That would have been my stop loss. That's my stop loss. This is my entry. That's not going to get me a 1 to 3. 1 to 3 would have been up here. And on a day like this, this is as high as we can predict at the midpoint of the New York fair value gap. So I'm just not interested. I want an easy run. This has to be easy for me. I don't want to be sitting here in a nail biter. I want to watch paint dry. I want it to be that slow, that obvious that I'm just sitting here bored watching paint dry. So much so that I set my take profit and my stop loss and I walk away. Once I've reached 2R. Those are the conditions I want to be in. This is not a favorable setup. Got 30 minutes left in our stream. We might just jump over into oil. Take a look at that for a second. See if it's giving us anything cleaner. So there's our manipulation range high, there's our manipulation range low. We took the high first, did not create a 5M, oh yeah, sorry, right here. Created a bearish fair value gap, came back into it, tapped it, and then took out the other side and swept out the lows. Just going to move this over. Just want to see what kind of a model we have. We're right across the board. So now that we've swept out both sides of the manipulation range, you want to see which side gives you a double break first. That's the side the market wants to go. There goes US 500, at least to the midpoint. That was again the furthest that we could predict it. Let's see if it does go higher. Remember, this is still a buy model. I'm trying to see what kind of model this is, but again, having some issues with the stream here. My apologies. So it's a downside expansion model and a clean cell model. So we had a cell model push up, and now we have this pull back into this area, but ideally the last thing we want to see is a bearish confirmation and a double break to the downside, because it's technically delivered. It's already swept out the lows. Remember, a sell model is only a sell model until it's not. A buy model is only a buy model until it's not. So proceed with caution. But everything on US 500, US oil, looks bearish. Looks like it wants to go into the DSD low, but I'd have to check it on a higher time frame. Fortunately, with our stream here, it's lagging. US oil might be moving right now. And then the DSD low would be the target. We could just get a bearish confirmation here as well. Yeah, not really offering anything up today. We've already kind of delivered to the highest point that we had predicted. With US oil, I think it can drop down into the DSD low here. If we get a bearish confirmation and we sweep this low, that's a double break to the downside. That means this market will most likely drop 70% chance or higher down to the DSD low. Now this is for US oil on the left. US 500, again, it's really kind of hit the area that we were predicting. We can't predict anything past this because of the divergence. Remember, we're high probability traders. And the highest probability for today was the midpoint of the New York opening gap, and it's already been hit. Could it go higher than this? Could it go all the way back up to this blue zone? Yes. But this is not the conditions that I want to be trading in. So we would be staying out. US oil on the other hand, if we get that other break and a bearish confirmation, that would be the target, the DSD low. It has all the other confirmation. We have a downside expansion model. We have a sell model. We manipulated to the upside first, created a 5M bearish fair value gap. And now we just need that last bit of confluence that crosses that line right here. That's a double break. And most likely you'll get your bearish confirmation, and then that would be the target, the DSD low, which is sitting right at 64. My apologies for the time lag here. 64.40, just to be safe. So it's just one point of confluence off, just crossing that line right at 64.70, I believe. Even when we get a confirmation, since this has already had an early retracement, this will move fast. Hasn't created any bearish fair value gaps in here. So I might want to use the wick right here, consequence encroachment, the midpoint of this wick, right around here, then push down. But just waiting for that line to be crossed, and then US oil is the more favorable trade setup. But you got to be able to look at the chart, immediately know, is this going to be muddied waters? Is this going to make for a high resistance liquidity run? Stay away from those days. This should look easy to you. Now that's where FOMO comes in though. FOMO comes in when you feel like you need to trade every day. You need to see something. So then you start making up. Then it becomes, so there's a difference between finding patterns in chaos, which is what we do, and then just pareidolia, thinking that you see something, some kind of a pattern when there's not. And that's attributed to FOMO. You feel like you got to do something every single day. You don't. Day trading is not everyday trading. You got to be smart. Find the setups. If they're not there, you only took an hour out of your morning. If you're not in a high probability trade setup, 1 hour after the range formation, you're done for the day. Come back for the next session, come back next day, do whatever you need to. Now we've already had one successful trade today, this week. It was yesterday. We did not find a good trade setup on Monday. Had one yesterday. That was a little under 1 to 3. And that means we can sit back and wait for that next trade setup. If it's today, if it's tomorrow, if it's Friday, whatever it might be, we can take our time. A little over 15 minutes left in our stream. I want to see oil take that low, give us a bearish confirmation, and then that's the target, the DSD low, 64.40-ish. I want to play it safe. Again, you want to make sure you get your at least 1 to 3. That would be your stop loss. That's your TP. But I just want to see it cross right here. That's a double break to the downside, and most likely it'll give us our bearish confirmation. Otherwise, it could just stay in this range. People forget that. When you talk to most newbies, they'll tell you, yeah, the market's got to go up or down. No, it can go sideways all day and then break the next morning. You really want to be stuck in something like that? That's why this was our happy medium. That's why this midpoint, the consequence encroachment of the New York opening gap, was the target. That's the highest that we're predicting. Otherwise, it could just gesticulate back and forth here, consolidate all day before making up its mind. Who wants to get stuck in that? That's what happens when you have that much divergence, where NAS is telling you one story, US 500 is telling you another. You find the happy medium, the midpoint. That's not a coincidence. The fact that it's gesticulating here right now, it's engineering new liquidity. There are people going in long from here and people going in short because of the divergence from NAS. Who wants to get stuck between that? So US oil is still better trade setup. If anything else, I might even switch over US 500 here on the right. I want to let's see if we have some divergence between Brent crude oil and US oil. And again, my apologies. I'm not sure why our stream is so slow and lagging today. I'm just proceeding with caution here. I don't want to switch too many charts or zoom in. Don't want to freeze this this stream like we did earlier. Okay, so here's Brent crude oil. Is it telling us the exact same story? There's the manipulation range low. We have not swept it, but we did sweep the high here. So it was a clean. This one took the high and then we took the low. So the fact that the low has not been taken on Brent crude makes me want to set those targets a little higher. Maybe midpoint here, but then you might not get your 1 to 3. Either way, the story's still roughly the same. We're pushing down. Just want to switch back over to US 500. I don't even see candlesticks anymore. I just see a bias. I just see up or down. And that's what we've created here essentially. That's the difference between the fractal strategy, our fractal effects indicator. It's not even an indicator. It's technically a market translator. But that's the difference between our market translator and time lagging indicators. Time lagging indicators are showing you where the market's been. So you can then use that information, that aggregate data, to form your bias. Ours is a market translator that's letting you know where the market wants to go based off of chaos theory, based off after like certain quantitative analysis, certain math. There's a lot of computation happening on the back end of this indicator. But essentially that's the difference. A market translator versus a time lagging indicator. Yeah, this is going to be one of those slow crawls, guys. Whatever the move is, it might come a little later in the afternoon. For US 500, there's no need for all this gesticulation here. There is no fair value gap in here. The only fair value gap, the only bullish fair value gap, I should say, has been filled in. So the only reason it's taking this long is because this is a high resistance liquidity run. Look at what's in front of us. You got a blue zone. First, under here, you had the DSD low, then you had the blue zone, then you have the NYC opening gap, then you have the DSD high, then you have the highest possible strongest possible blue zone. Then you have your highs. All of these are strong magnetic points that the market is drawn to, but also pushes from, therefore offering up resistance, allowing them to engineer new liquidity, which is the lifeblood of the market. About 13 minutes left in our stream. Remember, oil is the only thing I'm interested in right now. I do not care about US 500. It's already hit the target. It's already hit the midpoint there. That's as high as we were predicting it. But I cannot sell this market. The only way I could sell this market is if it takes out this low here, gives us a bearish confirmation, retraces, and then gives us a bearish fair value gap. And that's not going to happen in 12 minutes. So, not interested in US 500. US oil, on the other hand, I just want to see it take this low one more time, give me a bearish confirmation, and then that would be the target, the DSD low. Sorry, I sound like a broken record, but sometimes you got to drive that point home. You know, the best way that I found, we made a video about this, the best way I found to prevent FOMO and to stick to your rules and points of confluence is to make an audio recording of your own voice and play it on a loop. Put your headphones on, have it in the corner. Right when you wake up, it should already be primed up, ready to go. You just hit play, and it's just your voice going over the exact rules. Wait for your confluence. Check all the higher time frame analysis, the higher time frame PD arrays. Wait for the manipulation move. All the rules, and you're just hearing your own voice reiterated back to you. And use tough love. Shout at yourself. Do not do this until all this happens. You've done it before and you failed. That's how you got FOMO. That's how you are where you're at right now. That's why your account's not in the green. Trust me, hearing your own voice back is very refreshing, eye-opening. It's a psychological trick. It's as if your past self is blaming you for not being successful. And eventually it sticks. You start sticking to the rules. You start becoming profitable. 1 to 3, risk to reward. You start measuring everything. You're not just jumping in blindly because you thought you saw something. Psychology. That's the real business we're in right now. People think this is finance. They ask you, what industry are you in? Oh, I'm a day trader. I'm in finance. No, you're not. You work in psychology. This algorithm is psychology and reverse psychology happening at the exact same time. This is elegant. That's the business you're in. And if you can master that, you'll be profitable. US oil, again, just gesticulating, just sitting there still. About 9 minutes left in our stream, 2 more candles left. Just been that kind of day. You got to expect that, right? It's okay. Come back tomorrow. We already have 1 successful trade yesterday under our belt. We already got our 1 to 3. A little short of 3, 2.8. I'm okay with that. You, at the beginning, are only looking for 1 successful trade a week with the 1 to 3 risk to reward. You find that, you're good for the week. Sleep in. Because what's the other side of FOMO? What's the other side of that coin? Greed. And we talked about that yesterday. Watch yesterday's video. Talk about entries and exits. Sometimes you can get a clean entry, but you get greedy and you're looking for maybe a 1 to 5, 1 to 6. You're like, I know where it's going to go. You get greedy. You forget to roll your stops. You forget to take some off the table when you hit 2R. You're not following your rules. One minute, 58 seconds left in this candle. We'll watch one more candle print after that on the 5M, and if we don't get that push, we're done. Keep in mind, this strategy, if you follow it to the T, is 80% accurate. 80% accuracy, and you're always going for a 1 to 3 risk to reward. If you're not profitable with that setup, there's something wrong with you. It's not the strategy. This isn't one of those hokey strategies that random people just made up. You know, this is not harmonics patterns. I see a bat pattern. I see a whale pattern, or whatever the hell they come up with. Again, pareidolia. You're seeing patterns in chaos that aren't there. This is a market translator. This is letting you know exactly which direction the market wants to go. And when all points of confluence are met, the probability is over 70% that you're going to, if somebody told me there's a 70% chance that I was going to win the lottery, how many tickets do you think I would buy? As opposed to the regular statistics of me winning the lottery, where I have a better chance of being hit by lightning. But if somebody said I had 70% chance of winning the lottery, come on. Then you can feel comfortable taking that trade, even if it ends in a loss. That's just a business expense. That's no different than a business expense at that time, at that moment. Ten seconds left, and then when you got one more candle, doesn't look like it's going to move. Looks like it just wants to gesticulate, which is fine with us. As I've told you this before, sometimes the best trade is the one you don't take. Capital preservation. That's our primary goal. Not trading. Capital preservation first and foremost, then making money. It's like climbing a mountain. If you don't have a strong foothold, you're not making sure that the lines are tight and everything's locked in, you're just going to slip and fall down that mountain, right? What's the point of climbing up if your foothold isn't even strong? So when US oil finally does cross that, it's most likely going to move quick. It's probably going to give you a bearish confirmation, a double break, a bearish confirmation, and then push. I don't see it coming back into this over and over, just because there's no fair value gaps created, and we've already done an early retracement. Technically, it doesn't need to be sitting there now. It's just consolidating. It's just engineering new liquidity. People going short here, people going long here thinking like, hey, we swept out these lows, so it could push up from here. The only way you could ever take a buy on US oil is if we take out this high and get a bullish confirmation. And even then, we'd have to wait for a retracement back into our zone and then a push up. Until that happens, there's nothing here that is telling you that this is a buy. You have to be able to look at this chart and tell me immediately, is it a buy or sell? And then wait for the setup to actually take that buy or sell. That's the next part, right? You wait for all those points of confluence to enter the actual position. But immediately you should be able to tell if it's a buy or sell, just by looking at it. Here, we can just go up and down right now. Let's pick something at random. Let's pick a 4X pair. Just going to scroll up. Random 4X pair. Let's go GBP CAD. do it on this one. Here, GBP USD. Hopefully it's zoomed out. Okay. So GBP, we already have a trumpet model. That's a buy model. Double break. This is a bullish market. You should be easily able to take a look at this and tell me which direction it's going. This is bullish. Now I need a higher time frame to see exactly where it wants to go. I have to see where the 4-hour fair value gaps are. But what do we have here? We have a buy model. We have our first break to the upside. There's your manipulation move. There's your double break. You have a bullish confirmation. You cannot sell this market. It's green across the board. All you can do is look for a buy. So that was our clean break. What happens once we get a double break? Double break happened here. We wait for another retracement back to our blue zone and then a push up. So there might be one more push back down into our blue zone, into the DSD high. But I cannot sell this market. I don't know, again, on the higher time frame where the 4-hour, I'd have to check. Let's check real quick. About 2 minutes left in our stream. This is the last thing. I'm just going to do a recap. And again, I apologize for the stream lag. Being cautious not to do too many things here. Doesn't want to go to the 4-hour for me. Okay, so there's a lot of lag here. It's not letting me, oh, maybe now. Okay, how can I? This is the other reason I don't like trading while we're actually live, just because if I get one of these where like the software is freezing up on me, I got to know what's happening second by second. So if the software freezes up on me, then I'm not exactly in a good position here. So if I can do this properly here. So there's your first 4-hour fair value gap. We've already tapped it right here with this candle. And now the next 4-hour highs, I think, are up here. Yeah, right here, that orange line. That's most likely where it's going. That would be the target. I'm pretty close to it. Can we touch it? Hold on. Sorry, it's the lag. My apologies, that's the lag. Keeps trying to zoom out here. We're going to get that stream fixed up by the next time we go live. So we're live. We're live tomorrow, same time. Right now we're live Tuesday, Wednesdays, and Thursdays. Yeah, my apologies. The stream is completely just lagging, so there's no point. But that was just a demonstration of how quickly you can actually take a look at a chart using our market translator and be able to tell exactly what's happening. How long did that take? That took me about 10-15 seconds to tell you the bias of that market, and then you zoom out on a higher time frame to just make sure the targets are accurate. So that orange line right there, that'd be most likely my target, the 4-hour high. Now it's going to keep zooming out for a little while, but again, that's just the time lag. So we'll conclude our session there. We didn't really get a push, but I hope you got some education from this. And if you did, please subscribe, turn on your notifications. Please check us out on social media, fractal.effects. We're always uploading new educational material. And that's our stream. We'll see you guys tomorrow.